Hey guys, I want to do a real quick, very basic video on the simplest of imaginable concepts. It's not really worth a live stream. Not many people have questions about this level of stuff, but I wanted to quickly run through it using Binance, placing orders. As silly as it sounds, some people don't have a lot of experience. They've just gotten into the space. They've used Coinbase or Kraken to buy some Bitcoin, and they don't have a lot of experience trading with altcoins. So let's briefly run through it. Take a few minutes. It's that simple, as many of you know. Um, Once you get money into Binance, so using Binance is very simple. I'm not logged in actually, so I can't show you everything, but I'm going to assume that you know how to deposit funds. If you don't, shoot me a DM on Twitter at ToolFreeCrypto, or shoot me a DM in the Discord group. If you're in our Discord group, the free group, paid group, whatever, let me know and I can help you. But if you're that new, we could probably do a live stream, just the two of us, or with maybe a small group of people doing those additional steps. But assuming you can get funds into Binance and you just need to know how to place orders. You have a bunch of different pairings. There's BNB markets, BTC markets, all these coins that are paired with BTC or ETH, what have you. As you know, with my trading strategy, in order to mitigate risk in times of uncertainty when we're not sure and don't have a high level of confidence in our analysis of the market at large, specifically with BTC and what it's potentially going to do. USDT pairings are a great tool. If you get stopped out, your money is safe, you're in Tether, you don't have to worry about taking a loss with Bitcoin dropping as you would if you got stopped out into Bitcoin from a Bitcoin pairing. So we're just going to use a Bitcoin example. We could use a USDT example as well. I'm going to just do Nano and BTC. For those who don't know, a stop loss, a stop limit order, it's commonly used in common parlance as a stop loss because you're stopping your losses, but your stop limit order could actually be used to buy as well. So you have three different types of main orders. You have limit orders, market orders, and stop limit orders. So with limit orders, if you see these are all the people willing to sell, somebody placed a limit order, somebody actually went in to their computer and said, I want to sell 37.31 nano at a price of 4077 Satoshi. So they went in and typed 4077. They want to sell, 37.31. That's how many they want to sell at exactly that price. And then the button down here to sell would be sell. Or sorry, this is for buy. So 4077 to sell it, 37.31. And then they hit sell. It appears in the order book. This shows all the orders, every order that's been placed to sell, every order that's been placed to buy. These are people trying to buy it at a lower price. You always want to bid, like with an auction, at a lower price, and that's where the term bid-ask comes from. It's your bid and the ask. So these are the bids for Nano, and this is the ask for Nano. They're asking for 4076 sats for 37.31 units, and you're trying to buy, you're bidding 4064 for 157 nano tokens. That's the order book. Trade history over here shows each order that's completed as they're getting filled. The spread is the distance between the bid and the ask. And if it's a larger spread versus a smaller spread, that could be relevant. We can get into order book analysis and using it for your trading strategies later. But that's essentially what you're seeing on the screen here. So when you place your limit order, that limit order just goes in the available order book. Now, if you use a market order, I don't use a market order ever, sometimes in very rare cases. What a market order will do is you're going to say, I want to buy 100 nano. You're not specifying a price. It's going to take the market price, which is it's going to fill it right away for you. So if you want to buy 500 nano tokens, you're going to place an order for 500 with market price and hit order, or hit buy, rather. And then it's going to immediately buy 500 tokens. So it's going to buy this for 0.09, this for 5160, this for 91.72 tokens. It's going to buy these 17 tokens, these 71 tokens, these 177 tokens. It's going to buy each of the orders in this list from the bottom up. It's going to try to get you the best price. If somebody placed an order right here for 1,000 tokens, they're trying to sell 1,000 tokens, it'll buy 500 from that guy. If there's somebody here trying to sell them, and it's a much cheaper price, it's always going to fill that price first and move up from there. The reason you don't want to use market orders If you place an order to buy 500 tokens here, it's going to buy all the way up until you get 500. It might go all the way up to 4082. And then you're going to end up spending a lot more. If you spent 4066 sats on each token, that would be a lot cheaper. So the better strategy is to place an order to buy Nano at 4066. You're going to buy 500 of them, and then that order is going to appear in the buy side of the order book. 500 units for 4066 Satoshi. And then as soon as that spread gets closer, as soon as somebody is willing to sell at that lower price, say the price starts going down and everybody thinks the price is about to drop, people will start filling orders and start placing those limit orders for a cheaper price. They're willing to take less money. They're asking less. You're bidding 4,066 sats, and they're asking 4,068 sats. Once the price comes down and they start bidding 4,066 sats, it'll match up with your buy order, your bid, and then your order will get filled. So it's much better to do a limit order. Sometimes it's harder because you want to buy 1,000 tokens at once. So you might have an order here to buy 1,000 tokens at 4057 sats. And until somebody's willing to sell at that price, it's going to just sit there and not fill. Then it may fill 10%, 15%, 20%. If you want to get it filled right away, you have to do a market order, but you're going to spend a lot more money that way. So it's not recommended to use market orders. As a beginner, if you want to use market orders, that's fine, but you may give up some of your profits by not getting the ideal price, whether it's a buy order or a sell order. If you're selling, you might end up selling for less because if you want to sell 500 tokens, it's going to sell 34 to this guy, 37 to that guy, 11 to this guy, 42 to this guy, until all of your tokens are sold. So that's the difference between limit and market. Now with stop limit, there's a little window here. You can click on the question mark and it says exactly what it is. You buy and sell a coin based on the price when a price reaches a specific price. So there's an extra setting here. With limit, you just have price and amount. With stop limit, you have your limit order, your price, same as limit. Limit refers to limit. So your limit order on stop limit is the same as just your price when you're trying to buy normally with a limit order. So your stop is your target execution price. So let's say, obviously Nano is not at 1,000, it's at 4057 sats. But just to make it easy, let's say the current price is 1,000 Satoshi. You want to buy some or sell some. We're going to talk about stop losses here specifically, so let's go with the sell side. We're going to sell our Nano. We have 500 Nano to sell, and we want to sell it. It's currently at 1,000 Satoshi, right? That's the current price. We don't want to take too much of a loss. We're only willing to lose up to, say, 3%. So 3% off of 1,000 is 970 Satoshi. So as soon as the price hits 970 Satoshi, it's going to execute that order. It's going to stop whatever's going on and go and place a limit order for you and say you have to have a little bit of space between the two. So say you're willing to take 965 Satoshi for each, it would really be, 0.000970 and then 0.000965. So from 1,000 Satoshi down, 965 would be 3.5%. So the least you're willing to accept is 3.5% less. So instead of having your 1,000 Satoshi valued token, you're willing to take 965 Satoshis a piece just to get out of it. Because we know if the price is dropping really fast, once it hits 970, that target price, we're pretty confident it's going all the way down to 910 or 840. So when we're seeing the price drop and we have a stop loss order set, as soon as you get to that target execution price, that trigger price, your stop price is your trigger price. Once the triggers hit, everything stops and the focus is on placing a limit order. And that's the easy way to remember it. Imagine the stop order, the stop price. Imagine it like this. The stop price is an alert that you have set up on TradingView. So the price is coming down. As soon as it hits 970 sats, your computer starts beeping at you. Alert, alert. Your alarm has been triggered. This coin is now at 970 sats. You're immediately going to stop what you're doing, hence the stop price. You're going to go to limit and place a limit order. So you're going to stop what you're doing and place a limit order. And then the rest of it is just like a regular limit order. It's going to be as if you went over and placed a 965 Satoshi limit order, to sell. Zero 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 97. What were we selling it at? 965. That's right. 965. It's as if 970 gets hit. As soon as that stop price gets hit, you're going to stop what you're doing and go and place a limit order for 965 to sell your 500 tokens. And that's how it works. Remember how I said when you place a limit order, even though you're placing it for 965, if there's orders available for 1,000 or for 999 Satoshi or 998 Satoshi, it's going to fill those first. It's always going to try to get you the best deal it could possibly get you. So you're going to get a higher price. If you set your stop limit for 970 Satoshi is your stop, and that's when it gets triggered, right? Your limit price is 965. That means that as soon as 970 hits, your limit order of 965 to sell 500 units will appear over here in the order book. Once that happens, it'll start filling right away as the price is down in that region. And if the price is going down, of your 500, the first 100 might sell at 970. And then 969 could be the next 100, and 968 might be the next 100 that sell. It depends how fast it's going down. Sometimes it bounces a little bit. But it's very important you understand the difference because you need to have spacing between the two. If you don't, if you had this set for 970 or even 969, a difference of only 1 Satoshi, what would happen is the price 970 hits, your trigger price, your stop price, right? As soon as it hits 970, it places an order to sell your 500 nano at 969 sats. But if the price is dropping really fast, that order may pop up here for 969 sats, but by the time that happens and orders are starting to fill, the price might have gotten down to 968 sats. Now the current price is below your limit, your lowest limit that you're willing to accept, and now it's not going to get filled. Some people have asked me before, what happened? My stop loss didn't get filled. I bought it at $1. I had a stop loss at 98 cents, and it never got filled, and now it's down to 85 cents, and I lost all this money. I lost 15%. Well, if you had the right spacing between your limit and your stop, you would have been able to have that order executed safely, and you'd be out of that position without risk of taking an additional loss. And that's it. It's that simple. It's really, it comes down to practice. And if you look at my paper trading video, which is in my YouTube, it's one of my publicly available videos, I break down how to use the paper trading feature in TradingView. It's a really excellent tool because it gives you the opportunity to try these concepts out and work with different ideas, different types of spacing for your orders and the like. And you could sort of get a hold and a hang of the best way to do it. Certain coins have lower liquidity. There's lower volume. If this coin only trades, there's only one trade popping up every 5 seconds. There aren't a lot of trades. The volume is low. There aren't a lot of orders in the order book to actually fill your order. So if you had this 1 cent spacing, this 1 Satoshi spacing between your two, it's unlikely it's going to fill because it usually takes 5 seconds just for one order to actually get filled. There's not a lot of leeway there on the order book. If it's one of these coins like I can show you, if we go to USDT and we go to BTC, watch the trade history now. You're going to see it is flying. Every second is another 5 or 10 trades. In this case, you can have a much more modest difference between your stop and your limit. You don't need to have as much of a gap. If you want to take a 3% loss, you could probably say, all right, at 3% is my stop price. That's when my limit order goes into effect. I'm willing to take a lowest possible limit of like 3.1%. You could add on just a tiny more of a loss after your stop price when the trade's executed, and that'll probably cover you because there's so much liquidity. The volume is so substantial. There's so many orders that are constantly being filled. There's a good opportunity that you'll get your order in a lot quicker when you might not on some of these much lower volume alts. That's something you'll get the hang of with practice. But again, paper trading is a great tool. I can go to the Knowles USDT pair or the, quantum. I could use any of these, but let's just say I already have on the screen right here. Here's ETC and USDT. I could take this pair, and based on this trading, I can use. I'm not going to go into paper trading here. You'll have to watch the other video, and if you have more questions, you could ask me. If you do this paper trading option, you have $100,000 that you can play with. My open profit, this I just did kind of joking around on a few plays, and I'm essentially up, what is that, 22 grand it looks like. So you can play around with this and place different orders, but this is an opportunity to use different stops. When I use my long tool on my charts, I'll show, in this case, I have a stop loss of 2%. Takes me down to 1238, and that's essentially what I would place as my limit order in some cases, usually in most cases. Sometimes what I'll do is if I'm willing to take a 2% risk here, and I buy right here, and I want to have my stop loss down here, say this is $1 and this is 95 cents, I can actually place 95 cents as my limit, but I'm going to put that order into effect and start selling a little higher up. Sometimes I might want to make that 95 cents my stop price when the limit order goes into effect, because I can't afford to go any higher than that. I really don't want to go any higher because I have a strong support line right here that's protecting my stop loss. But that's something, again, you could practice on TradingView. You could try with different strategies as far as how much spacing you place between your stop and your limit. And that's something that'll come with time. And I can help you along if you have any questions. Like I said, shoot me a DM if you don't get it. Shoot me a DM if you're trying to get a better grasp on how to time things or space things. Because while it does take practice and you have to learn on your own to an extent, I've been through it all, and I've tried every conceivable possibility. I've made every mistake you can think of, and I'm more than happy to share that info with you. So that's it. That's the gist of it. That's placing orders on Binance. It's very simple. Your open orders are always available down here where you can cancel them and check their status. Sometimes you can see what percentage of them have been filled. Some of my orders might get filled 50%. Some might get filled 90%. It all depends on the order book and how many orders can match up with mine with the bid and the ask. If I have the top buy order right here, this guy who's looking to buy at 70.40, if his order's sitting there and some other person somewhere places a market order, since he's on the top, his order gets filled first with that market order. And then lastly, very briefly, same thing the other direction. If you wanted to buy, which isn't really relevant considering we're talking about stop losses here, but using the stop limit order option, you could set it up where if you think the price is going to run up, but you're not really sure, you want to wait. So right here, 6,700. Say the price is down here, 65, 6,600. But based on your analysis, you've come up and made a decision that, just like with this big green candle here, if you get a really strong big green candle there, then you're going to buy, because that means you're probably going to go on a nice run from there, because that's a super bullish sign. So say the price is hovering right here around 67.20. You can place an order that says if the price does shoot up to 68.50, then I want to execute a buy order, because that's sort of giving me confirmation of a breakout. You might not want to buy down here because there's still a chance that it drops, but once you get that big green candle, now you think you're much more confident that you're going to move up, and now you're thinking we're in a bullish scenario where the price is going to increase. So in that case, it's the same thing, just going in the opposite direction. We're hovering right here in the low 6,700s, but once the price gets to 6,800, that's when you say this has been confirmed, this is a breakout move. So as soon as it hits 6,800, we're going to place an order to start buying Bitcoin. We're going to buy one Bitcoin or a half a Bitcoin. As soon as it hits 6,800, we're going to buy a half a Bitcoin. We're willing to pay up to 68.50 for it, for 0.5 Bitcoin, $3,400. Go ahead and place that order. Right now, even though we're in 6,700 territory, once the price hits 68, it's immediately going to start buying your half a Bitcoin as fast as it can at the lowest possible price until the price hits 68.50. If there's a huge surge and every order instantly gets purchased, you might not actually have your order filled, just like when you were doing the example with selling. With BTC, that won't happen. With BTC, $50 gap is probably completely fine. But with a much lower volume play like nulls, if you wanted to do the same thing, it's going to be tougher, because once it starts moving up, if you don't have the right gap for your order, it might not fill, and then the price is already too high, and you're never going to get it filled unless it dips back down like it did here. So again, that's part of what we have to practice and get a handle on as far as that spacing. Anyway, that's it. I feel like I'm being redundant now and kind of going in circles. If you have any questions, let me know. Hopefully this was helpful and it answered some questions. And if not, fuck you.